Ambareesh Baliga, who's an independent market analyst, joins us now. Ambareesh, difficult times, and market is also showcasing exactly that. How do you read into this particular situation?
No, I mean, the situation is very fluid. I mean, when the markets opened this morning, there was an expectation that, yes, I mean, it'll open with a gap down, but we could cover that gap to a certain extent. We should consolidate. The main reason being that there was a hope of this war ending soon, or at least, at least for a while, because there was an indication of a request for talks by Iran. But now even that has been negated. And we are hearing President Trump talking about more US lives being lost, the war possibly carrying on for the next 4 weeks. So, which means a longer uncertainty for the markets, and which normally the markets don't like. The markets don't like any uncertainty, and especially something like this, which is linked to geopolitics. So I think we could see the markets possibly, seeking lower levels, especially, as far as India is concerned, because tomorrow is a holiday. So, we don't know as to what can happen over the next 48 hours. So people may not want to take forward positions.
That's right, Ambareesh. It's a truncated week as well, and there is a fair bit of weakness that is being seen. How would you read into the defense stocks and that particular sector amidst geopolitical tensions resurging now?
See, I mean, defense is one of those few sectors where the sentiment would be positive because of the geopolitical issues. But this doesn't mean that it will convert into orders immediately. And like I've been saying earlier, execution has been an issue as far as the defense space is concerned. So I would say that people should utilize any sort of a sentiment positive and upside in the defense stocks, maybe to book some profits there and utilize that cash for buying into other sectors which possibly can perform post the war.
That's right. It's more of a sentiment reaction when it comes to the defense sector, Ambareesh, as you rightly pointed out, without any material or meaningful impact on the sector immediately. But when we look at the current state of affairs, where any sort of de-escalation is a risk factor currently, and this may continue. What will be your advice in terms of investment strategy, in terms of investments, profit booking, or is it wait and watch and a cautious stance?
No, I would say possibly wait and watch, but at the same time, don't completely remain on the sidelines. I mean, do some cherry picking. I mean, if you're especially if you're sitting on some amount of cash, do some amount of cherry picking, because the day we hear of de-escalation, the day we hear of some sort of a truce, or Iran possibly having a new regime, which is as per what US has been talking about, you will see that the markets will bounce back very, very sharply. Because if you see that, I think Iran was the only issue which has been there for a while. And if that is out of the way, I don't think there will be anything stopping the markets. And especially, I would talk about the Indian markets because we have been underperforming for a while. And once this is out of the way, we could see a very big spirited rally. So don't miss this opportunity. But at the same time, I would say don't put all your money at one shot. Just keep doing cherry picking, because I think we'll have the next possibly couple of weeks to buy at lower levels. And at the same time, let me tell you that unless something major happens, I mean, if it just continues like this, I mean, what we have seen as far as Russia, Ukraine is concerned, something similar carries on. I don't think that the markets will crack. I mean, they were settled at low levels, and from there we could see a rally back.
All right. Thank you so much, Ambareesh, for giving your insights on the market movement. And there is extreme volatility and weakness at the current moment of this ongoing developing global situation.